Okay, I'll go ahead and get started. I want to respect everybody's time here and make this very short, concise, to the point. If you haven't joined us before in these webinars, we really keep them just really short, casual, to the point. Won't take up too much of your time, but really do appreciate everybody coming to this webinar and taking time out of your day to do so. So let's go ahead and jump right in. In this webinar, it's going to be a very quick, high-level case study of a multifamily development project we have in the works right now being developed in Fishers, Indiana. So this is meant to serve as, one, a case study just showing you exactly what a multifamily development looks like from a passive investor's standpoint. And two, this is a pretty good representation of the projects we'll be doing in the near future. Class A, mixed use, multifamily developments here in Indiana. So as I go through this case study, this is going to be a really good example of what you can expect to see from us in the coming future. And yeah, I'll again keep it really short, concise, and lightly to the point. If you have any questions, just go ahead and put them in the chat. I'll either stop in the middle of a slide or get to them all at the end. But let me know if you have any questions, comments, or feedback in the chat. All right, so we're going to get started. And before I dive in, my attorney likes me to get this out there in the open, so I'll quickly go through this. But this webinar is strictly for informational purposes only. We are not selling any securities or offering any kind of investment. The property we're going over today is not open for investment. We are not taking investors. So everything in this webinar is strictly for informational purposes only. None of this is financial advice. Every investment has risk. You should always consult with your attorney and other professionals before making any investment into any deal. And everything in this webinar is property of Goodin Development and should not be distributed on social media or anywhere else. So just get the fun stuff out of the way. And if you don't know me already, I know there are some people already here on my investor club list and some new people as well. If you don't know me, my name is Justin Goodin. I'm the CEO of Goodin Development. We are a multifamily development firm headquartered here in Indianapolis, which is where I've been born and raised here in Indianapolis. I got my first taste of real estate back in 2018, where I started buying rentals and fix and flips and things like that here in Indianapolis. I was doing that through college and, quickly realized that if I wanted to scale my business, I would have to go into commercial multifamily investing, which is where I ended up going. What really triggered that for me is on one of these rentals that I was buying, I had absolutely no idea what I was doing, but I asked the seller why he was selling that rental. And he mentioned that he was liquidating all of his rentals and all of his single family properties to go invest in apartments. And he was a younger guy like me as well. He was also in college. So it was kind of just mind blowing that a guy like that, average guy could, take that leap and go invest in commercial apartments. So that really just propelled me to kind of start learning about, working with investors, partners, and going after these larger deals. Aside from that, I was self-managing all my rentals. I was managing the contractors on my flips. Some of this stuff sounds good on social media. It looks cool in the TV shows, but fix and flips, rentals, it is absolutely not passive. And it's not as lucrative as some of those TV shows make them out. And it was really just another job on top of the job I already had already, which at the time was going to school and also working. So aside from college, I studied finance at a business school here in Indianapolis. I served in the Army National Guard and got really intrigued by apartment investing, like I mentioned. So my first job out of college was a multifamily underwriter for a bank here in Indiana. So that, provided me with a lot of tremendous experience, a lot of awesome experience with what I do today in my business. I've been on the banking side, the investing side. So working for the bank, I think really helped me out and, allowed me to kind of see how banks underwrite deals, how they evaluate sponsors. So today, just to recap, but Goodin Development, we are strictly focused on ground up multifamily development here in Indiana. The past 4 years, I did run a company where we bought, value add existing multifamily properties. But earlier this year, we have transitioned fully into doing ground up multifamily development, just like District South here. So let's dive into District South. This is located in Fishers, Indiana, which I'll touch on here in a second as well. But this is what we call a mixed-use property. So there's residential apartment units and then also retail and commercial on the bottom floor. So District South is 85 residential units and 15,000 square feet of office, and then 5 small commercial suites. Those commercial suites are really more tailored towards small businesses. We're not going to be renting to like a Subway or like a major chain. These are really like more towards a real estate agent or a small ice cream shop, or somewhere like along the lines of a small commercial business. So I will touch that on the office component. This entire bottom floor of this main building here is all office, and I am really happy to say that we're about 30% way through our construction right now. We had the office space pre-leased before we even broke ground on the property. So day one, when we start leasing up the property, when that bottom floor becomes available, we will have income coming in day one because our office space is already pre-leased with a 10-year lease. The 5 small commercial suites, we're still leasing some of those out. We do have one already pre-leased. It's a local insurance company. Another one that we're looking at right now is going to be a dentist office, possibly, that could take up 2 of those spaces. So a lot of interest in the commercial spaces as well, and we'll think those will all be pre-leased as well. Michael, great question. We do have one tenant for the office space. So this entire bottom floor is a company that's moving their headquarters from downtown Indianapolis into Fishers, Indiana. So yes, this whole entire bottom floor will be one company, and just one tenant, one lease, and it is pre-leased with a 10-year lease. So great question. And let's dive into just more on the overall deal. So District South, this is 5 different buildings. I will just stress it is very, high quality, A-class. All the units are going to have, quartz countertops, stainless steel appliances, luxury vinyl plank flooring, and just a very high quality interior, as you'd expect of the property of this caliber. And let me just give you a quick overview of what our construction is looking like right now. I thought that might be kind of fun. So this was just taken a few weeks ago. This is the progress we have, and just keep in mind, just 6, almost 7 months ago, this was just a pile of dirt, absolutely nothing there. So far, we're on budget, we're on schedule, and just extremely happy with the progress so far. You can kind of see that those renderings start to take to life right now and how we're looking. So that was taken a few weeks ago, and really excited about the progress right there. I'll also point out really quickly, I'll get more into the market as well, but I'll touch on Fishers and why this is such an amazing market. This space, I'm not sure if you can see my cursor. Oh yeah, okay. This space over here to the right of the screen, if you can see that, this space, there is a luxury 55 plus community being built, or started to be built later on this year. Actually, really happy about that, because they're going to have commercial and restaurants and stuff on the bottom floor. That is not competition to us whatsoever. That is a restricted 55 plus community, not senior living, not assisted living. It is quite literally just luxury apartments, but only rented to people 55 and older, which is another great asset class. So I think that's actually going to help improve the area. And this is right near downtown Fishers. This is a brand new hotel that went up on this left side over here. And then we're right near downtown Fishers, and the Circle is what they call it over here. But I'll dive into that here in a second as well. Triple net, Anthony, we are paying only the taxes for the office space. The taxes are included on our bill. They pay for all their expenses, and then also their insurance and things like that. Do you have to be an accredited investor? If you join a little bit late, this is not open for investment. This is not an offering. This is a property we already have in the works, and I'm simply just going over, what this deal looks like and what our deals in future could look like as well. This is a pretty good representation of what our next project is going to look like. So just some more renderings of what this project will look like. Nice, overall view of what that'll look like as well. And you can kind of see like that's starting to take shape from that video too. So let's dive into 3 reasons why we absolutely love this deal and think it's going to be an absolute just home run for our investors. One is the market. I didn't want to touch too much on that in the beginning because I had a whole couple slides about it, but the market is just an absolute, one of the best things about this deal. So if you're not familiar, but Fishers, Indiana is sort of in the northeast quadrant of Indianapolis, MSA, just about 30 minutes away from downtown Indianapolis. If you're not familiar with Fishers, I know there's some people on here local to Indiana and Indianapolis. Like I don't have to tell you about Fishers already, but everybody knows those, good areas and bad areas of the city. Fishers has always just been a extremely safe, high quality, just high growth area of town. The city for the last 20 years has just been investing a ton of money into this area. So Fishers has just been that, area of town or the city that always has all the new exciting restaurants, all the new development. The city is always hosting events. Fishers is just an absolute A+ market, in my opinion. And if you're already local here to Indiana, I'm sure you already know that. I don't want to spend too much time on that. But let's dive into the numbers. So average household income in Fishers is over 140,000. The population has grown by 45% since 2010. Tons of other data around Fishers and Indianapolis, but this is just a no-brainer market, and a lot of our investors were local to Indiana, Indianapolis, and they already had a lot of confidence in the market and already knew the area. But awesome area to invest in. And as far as like the actual location of the project in Fishers, as I mentioned, it's right near downtown Fishers. This is called like the Circle over here, where there's a brand new Fishers fire station, police station. This is the nickel plate amphitheater over here, where the city puts on concerts and events. Our project is in walking distance to all that. And, down the street from a Topgolf, from an IKEA. And over here to the right, this is the Fishers District, which is, just less than 5 minutes away. This was built a few years ago, has new apartments, has all the fancy restaurants, Shake Shack and high-end restaurants, a really nice kind of shopping and retail center. Less than 5 minutes away. My wife and I go there to eat all the time. And then most of all, like this property backs up directly to the Nickel Plate Trail. If you're not familiar with Indianapolis or Fishers, what that trail is, it's just a very, walkable, high energy trail that the city has invested a lot of money into. It goes all the way from northern Indiana all the way up into like other cities north of Indianapolis, but it's very high end and just a legendary trail, well-known trail here in Indianapolis, MSA. And our property quite literally backs up to that trail. You can see the trail off here to the left. Just absolute irreplaceable location here in Fishers, and for our property to literally back up to this trail, it's just amazing. We have a question. Did the lender require the office space to hit a certain pre-leasing benchmark prior to closing or disbursement of construction funds? No, I'm not sure what kind of a pre-leasing benchmark that would be, but no, we have it pre-leased at our pro forma rate. We actually have not even started drawing on our construction loan as of yet. So other great news about Fishers, these are just some other news articles you can look up in your spare time. But as I mentioned, just tons of growth here in Fishers. The city is investing a lot of money into the area, and we think will continue to do so. This is nothing new on number 4. It's always been in the top 100 or even less I've seen of best places to live. And then this IU Health Hospital is in the works right now on a $300 million expansion. IU Health is one of the largest and well-known hospital networks here in Indiana. And this $300 million expansion in Fishers is, I think, like less than 15 minutes away from our project. So just can't say enough great things about Fishers and the overall area. So that's one, obviously awesome thing we like about this project. Second thing, like we'll touch on the capital stack. So this is just the sources and uses on our project. I'd like to just quickly outline what this looks like for our project. So let's start first with our construction loan, which somebody just asked about kind of. Our construction debt, a little over $16 million, which on this project equates to, I think it's like just over 50 or 51% loan to cost. So, I mean, that right there is already really conservative. We're going in with a very low leverage construction loan. This was financed through a local bank, actually there in Carmel. I've done previous work with this local bank, and they've been an awesome partner in previous deals. So this is actually my fourth loan that I've done with this local bank. I think because of that relationship, we were able to negotiate a fixed interest rate construction loan, which I usually do not hear about. I mean, construction loans are most commonly, floating rate, which I'm not against, but it just cuts out one layer of uncertainty on the deal. Like we know exactly what our debt payments are going to be, which gives us comfort, gives our investors comfort. We can lock in the interest rate and just have more certainty into our projections. So fixed rate interest rate loan at 6.85%. We raised a little over $6.5 million from passive investors. And then the next one I'll touch on, municipal incentive. And no, this is not a typo. The city of Fishers invested $9.4 million into this deal. That was done via tax increment financing. If you have any questions about that, just feel free to DM me or send me an email. I won't spend too much time talking about that, but I mean, basically, the city is investing money into our project to help get the deal done. And as you can imagine, it's not just like, hey, here's $9.4 million, here you go. We had to go through a lot of different talks, meetings. They looked at us as a developer, looked at all of our partners on the deal, looked at our projections, and also had, a fair amount of input into the project, how they wanted to look, what they wanted to look like, and things like that. So in exchange for building this project, providing a high quality housing to the area, and bringing jobs and businesses into the area, the city was willing to invest $9.4 million into the deal. So I mean, just think about that for a second. Like, have you heard of like any other sponsors or developments or projects where the city is investing that much money into the deal? Our basis automatically going in is extremely low on this deal. This $9.4 million goes into the project. We're spending it right now on our construction costs, and it does not get paid back. It is simply money into the project. So that is like one thing I definitely wanted to hit on, and why this deal is going to be so favorable to our investors, is that $9.4 million of incentive that we partnered with the city on. And then a little over $32 million in total construction costs. Next, I'll touch on is our underwriting assumptions. And okay, yeah, Franklin, great question. I wasn't going to go too much more deep into that. Franklin's asking what sort of restrictions or control that are required with this incentive. Yeah, it's a common question that I get. But I mean, to answer your question briefly, there are no restrictions other than us guaranteeing a minimum tax payment. So in our underwriting and with the city, we came together to agree on a tax payment that the property would produce and pay. There are no affordability restrictions. This is not an affordable property or any affordable units. This is a mixed use market rate complex. No restrictions that I can think of other than we're guaranteeing to a tax payment to make. So great question. Okay, yeah, underwriting assumptions. Yeah, I don't really like to use the word conservative a lot. I like to use the word more like realistic. We like to strive to have our underwriting be more realistic about what we actually think is going to happen. We always like to, sort of like under promise, over deliver. I see like the word conservative being thrown around like so much in this industry. But then when you ask like these sponsors, like other groups, like how is their underwriting conservative? Like they really just don't know what to say or they can't think of anything. They're just like, oh, it's conservative. Well, yeah, I just like to touch on a few different items where I actually think that our underwriting on this project is more on the conservative or very realistic side. So the first one is our rent projections. So these are our projected rents on the property, meaning like these are the rents that we plan to start leasing up at the property in 2026. Um, we started looking at this property or this project in mid 2023. So we were making these projections, 2 years into the future. So these are all real comps in the area, and these are all the rates that they are achieving today. So when you look at the average rent rates the properties in the area are achieving today versus our project-wide average rents of what we want to start leasing up at in 2 years from now, you can see that we're slightly below where some of these comps are. And not to mention that our square footage is higher than these other one bedrooms. So our average square footage on the one bedrooms are higher than most of these comps. And we're right in line with what they're achieving today, if not slightly lower in our projections. And then, very similar story to the two bedrooms. Our average two bedroom sizes are larger than the comps and, very much in line with what they're achieving today. So at the time we were projecting in 2 years from now, we will be achieving the rents they're achieving today. So, if rents didn't grow at all in this area, we would still be in a very favorable position at the time of our lease up. And then similar story, but our organic rent growth assumptions. And if you don't know what this is, if you're a passive investor and haven't seen this before, this is basically where developers and sponsors in their underwriting are projecting a small percentage increase in their rent growth in their rent projections, basically just to keep up with inflation. So while there's nothing wrong with that, it is a really easy way for sponsors to overinflate their projections. And the reason why is because these numbers compound. So every year builds off the previous. We could have easily slapped in here 5% growth or higher year over year and just made these returns look awesome on paper, right? And it's good if we get that, but our project is not riding on, getting like this higher rent growth arbitrarily. It's good if we get it, and we're pretty confident we will get it, but our analysis is not inflated by doing that. So to sum this slide up, we projected 0% for the first 2 years. So remember, like we started looking at this project in 2023. So we projected 0% rent growth for 2024, 2025, and a modest 3% rent growth moving forward. I'm not sure if anybody knows this, but Indianapolis is one of the handful of cities in the entire nation right now that's still achieving positive rent growth. Other markets like Phoenix, Dallas, places in Florida, while those are all awesome markets, and I think they'll be good long term, they've also been very inflated the past couple of years. And a lot of those markets are achieving flat or negative rent growth. All the recent market reports that I've seen, even this year at the time we were looking at this project, are still achieving between 3 and 5% rent growth. But yeah, we're just being conservative and projecting for the next 2 years, 0%. So we're not trending rents through construction. I think this is a nice, conservative way to, pitch the deal to our investors. And that's the three things we love about this deal. If you have like any questions about this project, or other things we're doing at Goodin Development, you can go to my website at goodindevelopment.com. Right there on the homepage, I do have a free 7-day email course where you can get started passively investing If you're not sure how to do that or what things you should look out for before you invest in a deal, just go to our homepage, and right there we have a little sign up form where you can take our free 7-day course, and it'll walk you through how to get started investing step by step. Other than that, you can go to websites. Let me just show you, it might be easier. Yeah. So Goodin Development, if you're interested in looking at our project we have coming up in the future, you can just go to this little tab right here, Invest with Us. There's a simple form that you can fill out down here below. Take you like 30 seconds, and you can get into our investor club. And then when we have our next opportunity, you can be the first to get notified about it. Thanks for the webinar. Did you approach the city at the early stage of DD? Yeah, great question. Yeah, Patrick. Yeah, getting that municipal incentive is sort of like a competitive advantage that I think our company has. They don't give those to every project, every developer. I mean, it's really kind of comes down to like a science of, why you can go and convince the city to partner with you. But yeah, to just give you some clarity, we were talking with the city about this project for close to a year before we even started, which, it's already difficult enough to get the incentive. And then there's not a lot of developers that are willing to just, wait that long, put in the time, the effort, the upfront costs to work with an architect, a civil engineer, and things like that. Just so you can do all that and present a project that makes sense for them. Yeah, to answer your question, we were talking with the city for quite some time before this actually went through. Great question. Yeah, other than that, I won't spend too much time on this, but this is a sneak peek of another project we're looking at, also here in Indiana. Lofts is not the name. This is kind of just a placeholder name we're doing on these renderings. I actually just got these renderings yesterday. But yeah, kind of similar to Patrick's question, I've been working on this project for 5 months now. But yeah, this webinar was meant to kind of just be a good representation of what our future projects could look like. So again, I think this is a pretty good, a similar example of District South. This is going to be, mixed use, have some commercial and retail on the bottom, apartments up top. And as you can see, just very, very traditional, high-end, A-class. So, this is just an example of what a project could look like for us in the future. Not taking investments on, nothing like that. I just want to show you guys something else we're working on. We do not have any investments open right now. Hoping to have some in the future, or really near future, like I just mentioned. Month or so. We're working on a few different ones. And the one I just showed you is probably like the most serious one. Hoping to have that available in the next few months or so. And this, I think is really similar to District South. We are partnering with the city again to where they will invest in this project. Yeah, really can't share any more details other than that, but it is an awesome market here in Indiana, and really hoping that one goes through as well. So just a good example of what projects could look like for us in the future. And yeah, we have these webinars every few weeks or so. Like I just did one before this, and it was just 2 weeks ago. And I suspect I'll do another one in the next 2 to 3 weeks. So if you want to be interested and watch our next one, just make sure you're on my email list, which you can get on our email list by going to goodindevelopment.com. And I'll send out an email blast, and you should get notified of it. And yeah, any other questions before I jump off? These are all meant to be like very quick, to the point. I know everybody here is really busy, so these aren't meant to be an hour long and take up most of your day. But any other questions I can answer, I'm happy to do so, or I'll jump off. Okay, looks like that's it. Yeah, everybody, I really appreciate your time. I really appreciate you taking time out of your busy schedule to be in this webinar and staying with it through the end. So yeah, really happy that you joined us. And if you have any questions, just feel free to reach out to me. That's my personal cell phone number. This is my email address. But hope you all have a great week, and thank you for watching. Thanks, Patrick. Have a good day.